Welcome back to Tech Sheck. Moving along with interesting stories from the Pakistan tech startup ecosystem. Today, we decided to do something different. We have a sister entity, Paklaunch, who has also been doing some very interesting and prolific interviews with people who are either involved with or engaging with the Pakistani tech startup ecosystem. Please join us for this episode. We've taken a 1-hour show and edited it down to 20 minutes. We hope you enjoy this. Thanks for joining us here at Tech Sheck. Have a great day.
Hi, everyone. Thank you for joining us today. I'm Aatif Awan, your host. I'm the founder of Indus Capital, a Pakistan-focused fund. And I'm super excited about today's session because we have a very special guest here, Ansaf Kareem, who's a partner at Lightspeed Venture Partners. Lightspeed is one of the iconic VC firms out of Silicon Valley, but truly global in nature. I've invested in more than 400 firms, including Snap, App Dynamics, Carta, many incredible companies. So welcome, Ansaf. It's great to have you here.
Thanks, Aatif. Thanks so much. And thanks, Paklaunch and Ali, for hosting us.
So Ansaf, tell us a bit more about Lightspeed.
The first focus of the firm when the founder started it was very much early stage investing at the enterprise level. So, think about the building blocks of the early internet. The company was investing in a lot of those companies, Riverbed, Informatica, Nicira, storage companies. And I'd say over the last 10 years or so, I've really morphed into a multi-stage and multi-sector firm. And what that means is that rather than just doing early stage, now we do everything from $3 million seed checks to a pre-IPO investment right before a company might go public and everything in between. And then we've also morph that into a multi-stage opportunity. So rather than just focusing on enterprise infrastructure or some of those more hardware-focused investments, now doing everything from social mobile gaming companies to enterprise SaaS to continuing to do enterprise infrastructure, and then also new areas like digital health, Web3, you name it, we'll probably take a look at it from a sector perspective. And so I think a lot has changed, not just for Lightspeed, but also for the ecosystem. But for us, what we've been always laser focused on is how can we be early partners to the best entrepreneurs in any sector.
I do want to talk first about, your background. The first time we met, the MBA at Harvard and working at Grab and Relate IQ, that all, kind of was expected, fit with what you're doing. But you also have an amazing public policy background, doing a master's in public policy at Harvard, and then being a public policy fellow for Senator Cory Booker. So you might as well have been entered politics. So what brought you to VC? Tell us a bit more of that story first.
Thanks for asking. I guess some of my trends kind of go back to, I think, the way that I grew up. My dad, both my parents were born in Lahore, moved to Oregon in the early 80s. My dad's an engineer. My mom was a doctor turned social worker. And I think both of those sort of veins informed the rest of my life in many ways, sort of implicitly. I think I always had an interest in technology, and obviously growing up at a time when this technology boom is happening, you kind of get excited and immersed into that, and that was certainly the case growing up, even as a kid. But I also had this sort of thought that I wanted to make sure I had an impact on the world, and that your life needs to be focused not just on yourself, but creating an impact for others. And I think that stemmed a lot from a lot of the work that my mom did as a social worker. And so when I came to undergrad, I went to Stanford for undergrad, and I thought that the best way to do that was go to government. Like if you go work for the State Department or for a big bureaucracy that's focusing on age, for instance, you can have a big lever to make change and impact because it's the biggest business out there is government. And so that was my sort of hypothesis coming into school. And I think when I got to undergrad, I realized that back then entrepreneurship wasn't a cool thing at all, but there was these pockets of high energy, highly intelligent folks in undergrad who were focused on ideas. And many of those ideas were focused on impact at the time.
Totally. I agree with that. I think if you look at the last 3-4 decades, venture is the most transformational force that we have seen across the world. And obviously, that can lead to more inequality in some cases with concentration of wealth, but it's also changed billions of lives for the better. And it's just phenomenal to have the opportunity to do that. So let's get into the meat of it. Like we've seen last couple of years, phenomenal changes in the world, first because of COVID, but the VC landscape itself. When the pandemic hit, it felt like things would slow down, but actually very quickly it was clear that no, it's just going to accelerate. And then we're seeing the crossover funds really come into venture. And on the other side, accelerators continue to assert their power and operators becoming investors. So there's just so much going on. Talk to us more about what your view is on that. How is it changing, and what are the changes that are especially relevant for Pakistani startups?
almost by the month. It feels like, and I think the last 2 years has been the biggest sort of upheaval of the way that venture investing is being done in private markets that we've ever seen. Like when I was graduating, VC was almost like a cottage industry that sat in Sand Hill, and was this mysterious office spaces. And now almost every VC is a very public entity, and you can get access to them through Twitter and email, and everything is available. And obviously the long tail of the type of investors is increasing, as you mentioned. But you're right. I think when the pandemic hit in 2020, the first reaction, I think, by most investors was to pause, right? I think it was at least a month, if not more, of just let's see what's happening. And right now we could be entering into an environment that could be a downturn environment, and we want to make sure that we can support our existing portfolio before making a lot of net new investments. That very quickly changed, I think, over the summer time frame, where we realized that technology was actually going to be an accelerated force during this pandemic. And I think the whole community kind of leaned into that, both entrepreneurs as well as investors. And I think that's created the last 2 years of just such an amazing boom and progress. I'd say what's been happening for a while in venture, regardless of that at a macro level, is that you're kind of having two barbell approaches to the way that investing is happening. You have platforms, which I'd say Lightspeed would be one of them, which are maybe fewer in number, but are large in scale. And by scale, I mean very much what I was talking about at the beginning of the call, where multi-geography, multi-stage, multi-sector firms that are really focused on the full life cycle of a company. So if you want to start the company all the way to right before you IPO, you have a firm that can kind of guide you and be your capital partner through all of that. And I think those firms have certain strategies and economies of scale that lend them to be able to be really great partners for entrepreneurs, because they can pay for large portfolio teams that help those companies grow. They pay for things like marketing and a lot of other services that just a smaller fund wouldn't be able to support. On the flip side, I think the other exciting trend, in my opinion, is the rise of smaller firms and solo GPs. And you're a great example of one of them, where focusing on very specific strategies, specific either verticals, geographies, or niches, allow them to create really exciting personal opportunities for their fund, but also I think can be great partners for entrepreneurs.
Yeah, I think I like the barbell analogy, and two very different approaches, but both important. So building on that, if there are Pakistan-focused funds and they wanted to partner with Lightspeed, what do they need to do? What are you looking for?
So I think the two answers to that. I think one is what is already happening, which I think is amazing, is that you've got, like I was mentioning, folks like yourself who are nodes on the ground in these geographies. And so if I take the example of even our approach in Southeast Asia, or some of the investments we more recently made in LATAM, oftentimes we're looking for local partners who have the context, who have worked at and built scaled companies, who understand and can help with diligencing these markets. Because for many investors, I won't speak for myself, but who might not have a Pakistani context, for them to come and invest into Pakistan is a reasonably high hurdle rate. Many people in Silicon Valley might not even know exactly where Pakistan could be on a map, for instance, right? And so I think getting over that hurdle is important, and I think that's the role that a Pakistani fund can serve for many investors. I think the way that would tactically work is that the ecosystem that's being created, from what I understand in Pakistan right now, is very much focused on that sort of seed and Series A investment piece. And I think the opportunity to partner with a firm like ours or other similar firms is to come in as some of that growth capital at the Series A, Series B, and even Series C stages, to say, hey, now that you guys have done great work at helping prove out the initial concept and get to some level of scale, as you think about growth capital to be injected into the company, that's where I think a lot of the role that a Lightspeed, for instance, could play, and partner with some of the local funds in Pakistan to be able to help accelerate that.
But Pakistan had a phenomenal year. We ended up with 350 million plus in VC funding in 2021, more than all the prior years combined. So that's pretty exciting. When you look at, so we talked about stage a bit, but when it comes to sectors in, let's say, Pakistani market, what sectors would Lightspeed and you be most excited about?
Yeah, I'd say that, in much of our learnings from some of the other regions that we've been in, whether it's China or Southeast Asia or India, a lot of what occurred was, the first wave of innovation oftentimes is making the end consumer's life easier, right? And many of those companies, not always, but many times, were analogies to things that we saw in other geographies, right? So Grab is a great example. Uber, ride sharing generally was happening all over the world, certainly was happening in America. We believe that opportunity would exist and will exist in Southeast Asia similarly, right? And so it was a reasonably safe bet in the sense of understanding the customer pain point and what would be needed to achieve success there. And so we were able to make that type of investment. Similarly, if you think about things like food delivery, right, that would be another great example. Fintech, I think, is a huge opportunity in all these geos. It's something that I'm actively looking at across multiple geographies. All the same sort of pain points around access to money, investment opportunities, credit, both for direct-to-consumer and B2B, as huge opportunities in Pakistan and in a lot of these geographies. But I'd say if there was sort of a high-level wrapper around all of this, it would be mostly consumer-focused and mostly thinking about how do you create a lot of quick customer value in a place where really there's probably not a lot of competition, right? Like even in the early days of ride hailing in most of these places, certainly there were fast followers, but in the beginning, it was really just one or two companies who were focused on some of these opportunities.
So I see Kulsum has a question which is related to it, so I'll just ask that. She's asking, what's the perfect stage for you to partner with local startups? And then if it's a bit later, Series A and beyond, then what's the best way startups can build an early relationship with you?
And I think for a country or region like Pakistan, in general, our focus has been everything, like I mentioned, from seed to pre-IPO. But I think for some of the markets where we're getting our feet wet and starting to expand into, I think the area of focus would oftentimes probably be more on the sort of Series A, Series B side, where some of that early formation work and some of the work that I think our local partners like yourself and others can do will be very beneficial as we think about exposing, significantly more capital into a company and thinking about sort of the next growth stages of that company. And so I think as we think about new regions, generally what we've been focusing on has been sort of Series A, Series B, or sometimes even a growth investment to start to understand, learn, and really become good partners in that region, and then expand that over time into a much more multi-stage approach. So
does it make sense for founders at seed stage to still, reach out and build another relationship, or do you rather wait to see some traction, and when they're ready to raise for that Series A, then reaching out at that point?
Say that generally some traction is always helpful because I think it actually makes the conversation a little bit more productive, and we can have more things to sort of point to and discuss and unpack and hopefully learn together. One of the best things to suss out from the entrepreneur side of an investor is use some of those conversations and actual data to see how this person will be a thought partner and a board partner for you in the future. So I generally enjoy those conversations, but we do also like to build relationships early. Even if we don't invest in a certain round, oftentimes we can come back and invest in a future round. And
how do you see the exit landscape changing globally, and how can Pakistani startups best position themselves for that?
Really good, important question. I think that one of the knocks that many emerging markets from a tech perspective get are, is there an opportunity to exit? And I think a lot of that has changed in different ways over the last few years. One, I think you're seeing the rise of many regional winners, right? It used to just be China, US, maybe Europe, but now you've got, for instance, in Southeast Asia, many decacorns, public companies now like Grab, et cetera, who could be acquirers of companies that are adjacent in region to them. So it's not just reliance on a Alibaba for an acquisition. I think there are many more highly valued companies in the broader region within Asia that could be very acquisitive in the future. And so I think that's really exciting, and it's across multiple sectors. Now you've got Ant Financial, you've got obviously Grab, you got Alibaba. So the types of companies are expanding, and the type of interest in the end companies is going to expand because of that. I think the other thing that's changed is that, we've seen in geographies like even LATAM with Nubank more recently going public, where you've got markets that are just focused on one, or companies that are just focused on one market, like Brazil in the case of Nubank, becoming a massive company. So it's not even this old theory that you had to be multi-geography in some of these smaller countries to be able to create a big outcome, but you can actually have a big outcome out of focus on just one big country. And I think that'll be the case in Pakistan as we start to see some of these companies scale, that you don't actually have to go into multiple geographies to become a big company. I think that's really exciting for Pakistani companies to be laser focused on their end market and not have to too early start to think about expansion into other geographies. And
that's correct. Yeah, in some ways, Pakistan having such a late start, India started, 2000s, early 2000s, Indonesia in 2009. In earnest, like we started picking up in 2019, but I think what we're benefiting from is that increased mobile penetration, increased acceptance of emerging markets from VC firms, but also this exits. And I think it's great that what we're seeing is while some startups are opportunistically expanding internationally, but a lot of them just want to stay focused. They're finding very, very large markets in the process. So it's great to hear your view on that. So questions from audience. So Abbas Hassan has a question for you. What is the biggest lesson you have learned as an investor?
I think the first thing that jumps to mind is that every company is unique. I think sometimes we all as investors are meeting a lot of companies and try to create frameworks to understand and digest, and that's all important in terms of interpreting data quickly and being able to make some of these decisions in real time. But fundamentally, every opportunity and every company is unique, and that not only relates to the actual investment decision, but also post-investment, as you think about giving thoughtful and good advice to an entrepreneur about their business, understanding and appreciating the fact that that these businesses, each of them are almost their own person, and making sure you treat them as such.
What key startup metrics do you look for, when investing? And I'm sure that's different by sector, but what would be the top things, that you can generalize across sectors that really get you excited to say yes?
Yeah. I see this mistake often from entrepreneurs where, what they ask for, what they think about is there a bar that we hit? It used to be like $1 million ARR, for instance. We hit that when we get a Series A, because that was sort of generalized advice that was floated around. And the reality is there's no sort of check mark from a metrics perspective that folks are looking for you to hit, where at that point you'll just automatically get funding. I think what the reality is what if there was one generalized sort of principle to think about is momentum, right? And so that momentum can look different for different companies, but what that usually looks like is high month over month, week over week, quarter over quarter growth from a revenue perspective or a user growth perspective or an engagement perspective. And it can even be on a small end, but because we're in the business of exponential growth, if you start to see that happening enough times, even if it's early, that's where a lot of investors will start paying attention and say, hey, clearly something is working here. Let's unpack this further. So if there was just one principle that kind of works across B2B, direct to consumer, everything, the number one thing I think generally to be focused on is what's working from a momentum perspective and why. And if you can answer those questions well as an entrepreneur to an investor, you'll definitely get some good engagement.
What's the best way to reach a VC?
I'd say generally, look, I think it's cold emails certainly work, and like there are ways to get that kind of outreach and then get some reception from there. The best way to reach an investor, for better or for worse, is trying to either get a warm introduction if you've got somebody in connection, or catch their attention in a way, right? So there's folks who can, if you wrote a thoughtful blog post on something that's related to something that that investor cares about, or maybe your business just announced something brand new and it's relevant to that investor's sort of past experience or sector focus, trying to create ways to catch the investor's interest in a creative way that doesn't just say, hey, can I please have a meeting for 30 minutes? Generally is a better way to go about it. But again, the best way, especially for Pakistani-focused startups, I think that's what, for better or for worse, like I was mentioning, a lot of VCs are looking for some level of pattern recognition, especially for new geographies where they don't have boots on the ground. They are looking for local nodes to help them, guide them to some of the best opportunities. That's where folks like yourself and others, I think, can serve as great pathways to understand what's happening in the ecosystem. And so, for instance, an introduction from you or from another local VC is certainly very high signal in terms of, hey, we should pay attention to something from here, versus a generic Gmail email from an entrepreneur in Pakistan. It's just hard for the average investor to sort of say, is this something that I should pay attention to or not, especially if Pakistan is not yet fully in their focus area. So for the entrepreneurs out there, I would really encourage you to ideally build nodes and relationships with folks who are in Pakistan who also have connectivity to Silicon Valley, because those pathways, I think, will likely be the easiest and most productive ways to get in front of VCs in Silicon Valley.
Yeah, definitely warm intros work much better. And then the bar for cold emails, you have to be really creative. The bar goes higher. And I'm surprised like how often people wouldn't look somebody up and find the common nodes on LinkedIn. But these days, we're all pretty densely connected. And I think like that's an important part of being the founder skill set of figuring out whether it's for sales, VC, like finding these connections. Great. Talk to us a bit more about the regulations and what can the regulators do better to help startups, especially on the fintech side?
Yeah, look, I think regulation plays an important role in so much of technology, whether we see it or not. I think what we want to see the government or regulators in general doing is making sure they're not gatekeepers to innovation, right? So if you think about things like in fintech, if you think about licenses for digital banks, how do you make sure that there's enough opportunities for startups who want to offer new exciting products for end consumers or end businesses to have the opportunity to at least compete for that services? So the opportunity to do that shouldn't be gatekeep too much in terms of a number, but maybe more so from a requirement basis on making sure they're following certain laws and rules. Similar things like crypto, not to make a statement on whether crypto is good or bad for Pakistan, but generally it should be thoughtful policy around how do we make sure that innovation is not inhibited because of a broad rule around how we think about crypto, for example, in Pakistan. And we're struggling with some of these same conversations in the US, both when it comes to fintech licenses as well as crypto. So these aren't solved problems, but I think the core principle for regulators in Pakistan should be that it needs to be innovation forward because of the opportunity that I think it will not only create for end customers, but also the employment growth that's going to happen in so many of these sectors. We just don't want to shoot ourselves in the foot.
Ansaf, thank you so much for taking the time. This was a wonderful conversation. I learned a lot. And thank you everyone for tuning in and such wonderful and interesting questions.
Yeah, thank you so much for hosting, Aatif and Ali and Paklaunch. Thanks for having me and for all the great work everyone here is doing on changing this narrative and creating this opportunity for Pakistan.